Good holidays. Real quick, can everybody see my screen and can everybody hear me loud and clear? Awesome, awesome. I'm gonna give it at least 5 minutes for everybody to come on here. I understand it's the holidays. We had to do some rescheduling of everything. Just want to make sure everybody has a schedule and that everybody's good to go on this. So, like I said, hopefully everyone's having a good holidays. I'm gonna break down in detail today the different aspects when it comes to the psychological part when it comes to trading currencies. For the people that have been on here, this will be just a constant reminder for us to be self-aware of our emotions, and at the same time I'll break down the technicals as well. Make sure that everybody know that the beginner session is on right now. We're going to start with the next 5 minutes. All right. All right, here. Is everybody ready to get started? Everybody good to go? Everybody good to go? Awesome. All right. So, with that being said, welcome to the beginner session. I'm going to break it down in as much detail as possible. By the time this is done, we should be able to know the basics when it comes to controlling the emotional part when it comes to trading. But at the same time, be able to understand the technicals. One thing I've noticed during the holidays, it's a very slow market time frame. I hope that everybody could agree on that. So really utilize this time to really understand and to learn, because the thing is, I want to help you guys become self-sufficient to the point where you can become independent and be able to teach other people on how to trade these currencies. It's very simple. The thing about the trading style that I use, everything, it's pretty much a mixture, but in all reality, the main focus that I focus on is the trends. I focus on going to the path of least resistance. I focus on controlling our emotions and sticking to our disciplines and sticking to our foundations and our principles. And that's the main point when it comes to Forex. Before, when I first heard about this whole thing, $5.3 trillion day industry, in my mind, after seeing the people that have capitalized on this and been able to attain wealth, I became addicted. I became obsessed with this whole process. And like I said before, you don't have to love Forex, but I really implore you guys to really take advantage of it. Utilize it to create your own capital and equity. Whether it's to make an extra, $100 a week to $500 a week to 5,000 a week to 25,000 a week. The possibilities are here, because the same concept it takes to make $1 in the markets is the same concept it takes to make $1 million when it comes to trading currencies. All right. So with that being said, I just want to get everybody ready, good to go on the right mentality. Everybody's good to go. Everybody's ready to get started. Okay, awesome. Now, the reason why I'm showing you guys this screen now, I want to show you guys how simple it is. For a lot of people that don't even know what's going on, look how simple this chart looks. You can see there's little boxes, you can see the slanted lines, you can see these little circles. But in all reality, we keep it super simple. And if you could really get to that point in your mind where you understand that drawing one line, one box, and one horizontal line could be the deciding factor of you creating massive wealth on a daily basis, that's when you should be excited about this whole thing, right? Am I on the Wirecast screen? Can you guys see my screen? Can you guys see my charts? Okay, awesome. If not, please refresh it. Okay. But I want to give you guys a simple breakdown of everything. Keep it simple, straight to the point. As you guys can see here, this is USD CAD. But let me break down the emotional parts when it comes to this whole thing, because when I first started to get into this, I saw a lot of people making a lot of profits on a daily basis. Okay. But the one thing that I didn't realize that it was 90% mental. I didn't know that it was also only 10% technical. You know, just drawing the charts is the easiest part, but being able to be self-aware, stick to our disciplines, that's 100% us. So a lot of the times that we start to realize that the reasons why we lose in the first place is not the markets, it's because of our own self, right? And these are all key things. These are all key psychological effects that a lot of people go through anyways. Once I understood this and how to get rid of it, that's when everything started to change. Okay. Because now I knew that the easy update, I realized that all I had to do was be self-aware of all this. Once I was self-aware, I was good to go. Okay. So main focus, right? The reason why I say that, trading is 90% mental and 10% technical is who in here has been humbled by the markets? If you've been humbled by the markets to the point where you had a greed effect, euphoria, revenge trading for the markets, process for analysis, how many people have realized that You could call it these trades. It's 50-50. It's either going up or down. But the one thing that kills us the most is our own mind. It's just like anything else in life when it comes to simple stuff as going to the gym or even just in business in general. We realize that the one thing that stops us is greed, doubt, worry, fear. But once we're self-aware, you're able to understand the problems that you're having, and then you can be able to provide yourself with a solution. So we don't live in the past, we live progressive. We always live in the future, right? But we always realize that what we do today is what dictates tomorrow, okay? So just to start off, the number one thing that happens in the beginning first is the greed effect. And the reason why that this is really important to know is because greed is the number one killer of all good traders. And the reason being is because we're not used to it. We live in a society where we grow up to the social normalities of going to school, getting a regular job, all the type of stuff, etc. So when we come onto these markets and realizing that it's so easy to attain wealth by utilizing technicals and understanding the art of Forex, this thing gets triggered into your mindset where you have this greed kick in. You start taking trades, you start to see these profits, you start to see everything in blue. So because of that, a lot of logic, a lot of principles goes out the window because we're so focused on obtaining the money, right? How many times for the people that have been on here that have took trades and you've been in profit because we didn't take our profits, we had little to no profits, or even worse, we blew out our account. If you have, came across the greed effect, just type in yes. And the reason why I say that is because I want even the newest people to know on here that even going through these emotions is 100% part of the process. Okay, 100% part of the process. 100%. When you feel this, don't think that you're alone. Don't think that it's not for you, because no matter what, these emotions is going to make you feel like it's not. These emotions are going to make you feel that Forex is not for everybody. That people are lucky, people are blessed, to be able to have the eyesight and be able to see everything for what it is. But in all reality, we all have the capability of doing so. It's just some people's learning curves are more than others. So for the greed effect, what happens is because we start having these profits, we start making this type of money. Think about it. I flipped 1,000 and 20,000 in 3 days. When do we ever do that when it comes to anything else in life? When does it ever happen? And so because of that, it triggers something in your mind. It's the same way as some people when they gamble, right? That you want more. You want more, and you want more, and you want more. The whole main point is the same thing as if you're starting to train for like the gym. You count your macro, you count your micronutrients, and you stick to a journal, and you stick to everything, and everything is so strategic. Take it the same way when it comes to Forex. Do not be that person that comes on here, has an iPad or a tablet or a phone, and all of a sudden you start making some profits and think that you're a professional trader. The whole main point is to have a weekly positive return on investment, a monthly positive return on investment, a yearly positive return on investment. And that's the whole main point. And that's a trader's mentality of sticking to risking only 2 to 4% of your account, but at the same time getting your daily PIP goals. And I'm going to break down PIPs for you guys. But with the greed effect, in order to eradicate the greed effect, we have to have a way to take our profits, but we also have to have a way so we could be on that long-term trend. So one of the things that I've learned was twin trading, which I will break down in detail during the technical part of it. But what twin trading does, it allows me to take 2 trades within a certain area, risking only 2 to 4% of my account, right? And when one trade goes, when they both go at least 30 to 50 pips in profit, no ifs, ands, or but, what I do is I take the profit off one order and I change the stop loss of the other order as a stop profit. What that does, and it protects my account, so I'm risking no money. That's the honest way that I was able to get rid of the greed effect, because it got it out of my system. I was able to collect some profits and feel good, and then you change your stop loss to stop profit. I call that twin trading. You call it whatever you want. It's all the same thing. You can have different names, but if it's the same principles, it's all the same. You call it twin trading, double trading, whatever you want to call it, or just having proper risks and just being smart. But that's how I got rid of the greed effect, because it allows me to get those daily PIP goals for that day, but at the same time, it allows me to risk no money in my account and also be able to see if it's going to be in that long-term trend. Does it make sense? Everybody follow me so far? Everybody good? Everybody follow me? Everybody good to go on greed effect? Awesome. Awesome, awesome, awesome. Next is euphoria. Now, euphoria is, I honestly feel that for a lot of us, more often than not, we start trading the currency markets and then all of a sudden it's just like, whether it's demo, whether it's live account, but for some reason these profits just run wild. You had to think about it for a second. If you're not over analyzing, you probably have a high percentage of actually winning the trades. But what happens when you start winning your first trade, your second trade, your third trade? What happens when you win 5 or 6 trades in a row? What happens is it triggers in your mind this thing called euphoria, where you feel that you're untouchable, where you feel that you can't be stopped, and that everything that you're calling out happens. So what happens in our mind is say, hey, if I'm calling out these trades back to back to back to back to back, why not take a higher lot size? Why not put a stop loss? You know what I'm saying? We start to trade reckless because we feel that we're on top of the world. But the thing is, Forex is the first, people will learn from the beginning that Forex will be the first thing that humble you real quick. Forex will be the first thing to teach you patience and discipline and everything, because it will just wipe out your entire account by just being greedy one time, by trading reckless one time, by having no stop loss or over leveraging our account and getting margin called. You know what I'm saying? This happens for a reason. So order in order to stop that, what you have to do is you have to keep yourself in check. You know what I'm saying? Whatever you need to do, whether it's like you have your trading station and you have it in your notebook of your daily confirmations and risking 2-4% of your account, even as simple as what I used to do before, I used to take a rubber band and put it on my wrist. And anytime that I felt that I was going to do something that I wasn't supposed to be doing when it came to, sticking to my disciplines, I just took that rubber band and snapped it on my wrist just to remind me. You know what I'm saying? Out of sight, out of mind. So have it in a place where it reminds you to stick to 2 or 4% of your account. And the reason being I say this is because what happens when you have $200 in your account? Say, for instance, you're only risking 2 to 4%. Say, for instance, you're only doing 0.02s and you're doing proper risk management. Say you caught 1,000 pips that week average. You doubled your account from 200 to 400 the first week, right? The second week, it goes to 800. The second week, it goes to 1,600. The next week, it goes to 3,200. Then it goes to 6,400, right? And then it goes to what? 12,800. You know what I'm saying? So it doubles every single week. So think about to yourself that if we just stick to our confirmations, if we stick to our risk management, how much money do you think you'll have within the next, 3 months? Like 90-day game plan, right? 90-day sprint, just like we do in business. What if we did a 90-day sprint when it came to Forex, but sticking to our goals, sticking to our risk management? It starts to become comfort trading. It starts to become a lot less stressful because we're on here and we're trading the right way. Does everybody agree on here that if you use proper risk management, that'll be not as stressful? Does everybody agree on that? Has anybody ever took a trade where they took proper risk management, where it's going negative a little bit, wasn't even hurting your account, but then you're able to make some profits, right? That's one thing I had to realize. There's no way for you to be stressed out if you're using proper risk management. Now, it's different if you did $200, $300 account and you did a standard, right? Next thing you know, it goes the opposite direction, 15 pips. You're losing 150 bucks out of 200 to 300. I mean, like, how much are you risking? You're risking a lot. So in order to get rid of euphoria, you have to have it in a place that reminds you of the proper risk management. You have to have it in a place that reminds you of sticking to your daily pivot goals and changing your stop losses to stop profits. It's a little tedious things, but you have to realize it's easy to do. At the same time, the things that are easy to do are also the things that are easy not to do. So stick to it, stick to your proper risk management, stick to your daily pivot goals, and don't go against all that, because it honestly will backfire and it'll hurt you in the long run. Next is revenge trading, okay? Now, revenge trading is the exact opposite, right? The exact opposite of euphoria. What happens? No, not, that's actually fear the markets. I apologize. Revenge trading is when you can't control your emotions. Now, you have to get rid of your emotions when it comes to trading Forex, because you're emotionally connected to your money. You're not going to be able to take the trades the right way because you're so focused on the money aspect, when we should be focusing on the art of it. We should be focusing on the technicals of everything. What revenge trading is when you lose money, either you lose a little bit, a lot, blow your account. What happens is you go back into the markets and you're revenge trading. You're forcing trades to happen because the number one thing that happens when we all lose money in the beginning when it comes to revenge trading is you say these words: I just want to break even, or I just want to break even and get a little bit of money. That's the reason why I'm going to do a higher lot size, or that's the reason why I'm going to go back into my brokerage and deposit another amount of money. You know, I've seen it at a point where people lose $200 and then they deposit another $200 and they revenge trade and lose $200 and they deposit another $200. So rather than losing the trade like a professional, they lose $200, but in all reality, they lost 1,000. Whereas you could have held that money and be ready for the next day. In order to get rid of revenge trading, when you lose a trade, okay, let me get an example. Say you lose a trade, all of a sudden right here, you're looking closely, right? You see everything. You take this trade set up, you're looking for a buy because for some reason you see a double bottom. You take a double bottom. You think that you have all the technicals in place, everything is good to go. Market moves all the way up, and all of a sudden it just reverses and then it just drops, okay? So the best thing to do in that sense is to highlight the area of where you lost that trade setup and lose like a professional and close your laptop. What are you going to do the next days? And you go back into that area of the markets and find out the reason of why it did what it did. Okay. So now you have the area where you lost a trade. You're like, okay, awesome. So let me check this out. So I go over here. I see the area of support. Like, okay, well, there's an area of support there. It tested as resistance. Okay. I look closely. I see what you can see literally right here. You can see a zone here if I wanted to draw one, right? Let me see. I'll use this one. I like to use it around the areas of resistance and support. So then I see the area where, look, there's a zone here, but I also see that there's a trend line, okay? I see from here, the test, and I see it. Well, the reason why I lost this trade in the first place was because I was looking at an uptrend when in all reality it was confirming that it was going into a downtrend. There's an area of support tested as resistance. There's a trend line. There is a zone, right? And it had four confirmations that it was dropping. Okay, that's how you get rid of revenge trading. But instead of forcing everything to happen, hold on real quick, guys. Sorry about that. Let me move. Sorry about that, guys. I apologize. My family's all here together for the holidays, so we're making some noise. Apologize for the inconvenience. All right, so let's continue. Everybody could still hear me. Everybody can see my screen. Okay, awesome. So, with that being said, that's how I get rid of revenge trading. I get rid of revenge trading just highlighting the area where I lost the trade and then seeing exactly for the reasons of why. Okay. Now, the reason why I do that, right? The reason why I do that is because, if you make a mistake the first time, it's a mistake. But if you make a mistake the second time, it's what? It's a choice. Remember that. Not just in Forex, but everything else in life. You make a mistake a second time, that is a choice. You know exactly what's right. You know exactly what's wrong, right? So to get rid of red trading, what we do is we highlight the area. We find out the reasons of why we lost that trade in the first place. We go back into it, and boom, you know exactly what to do next time. You know exactly what to do next time. Okay? Next is fear of the markets. And what I was breaking down with fear of the markets is this is the exact opposite. This is the exact opposite of euphoria, right? Euphoria is when you take a trade back to back to back to back to back, and you're winning, you're winning, you're winning, you're winning, and you're trading reckless. Now, what fear of the markets is when you're losing. You're losing back to back to back to back. Hopefully, not that much, but at the same time, you're emotionally connected to your last trade. You know, you're emotionally connected to it, so it makes you fearful of the markets. When in all reality, you shouldn't be, right? Everybody could agree on here that if you're using proper risk management in the first place, there's no reason to be scared of the markets because you're not hurting that much in your account. Or another way to actually get rid of the fear of the markets, what a lot of people don't do is why not practice first on a practice account? Why not practice first on a demo account where we actually take, a certain amount of money, whether it's $200 in a demo account, and we flip it to over a couple thousand back to back to back to the point where you feel comfortable, right? You're not risking any money in your account. You're focusing on the technicals and your analysis. You're taking these trades, and if you're having a positive weekly return on investment on your demo for a consistent 90 days, or even if it was you only did it for 30 days, or whether it's 60 days, whatever you decided to do, think about how easier it will be for you to transition. An example that I use all the time is people that actually do the whole flight stuff. I was on a flight from like Air Canada going to Australia from Canada. Okay. And one thing that they were talking about all the time was the fact on the little video things that happen on the headrest that you can see that you're watching, is they talk about how they put in the hours. They put in, I think, three to five times as much more hours than a normal person does when it comes to being qualified to actually fly a plane. So we know the answers to this. Like, we know what it takes. But the thing is, we just have to be self-aware of it and not be in denial. You know what I'm saying? Practice, 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 practice. Repetition is your reputation. Repetition is your reputation. And get to a point where it's like clockwork. Get to a point where it's subconscious. Get to a point where it's subconscious for you to do proper risk management. It's subconscious for you to use all the confirmations that's necessary to trade. It just becomes a habit. And that's what we need to do in order for us to really become self-sufficient when it comes to trading. So in order to get rid of the fear of the markets, use proper risk management, become emotionally disconnected from money. You could even take a half of the lot size that you usually take, or you could just practice and practice and practice. Now, a lot of people all the time ask me, Chris, how do you practice? Well, the thing is, you have the answers to the test right here in front of you. It's called the charts. You see how the past is, you see that history repeats itself. So because history repeats itself, why not go into the charts and highlight all the areas, especially of a trending market, of all the areas where it reversed or it went into massive amount of pit profit, right? Highlight those areas and find out the reason of why it reversed in the first place. Think about doing that. How many people would feel comfortable if every single day they're taking 3 to 5 charts and marking it up for at least 30 minutes to an hour every single day, highlighting areas of where market is continuing along with the trend, and then find out exactly and why it happened, and practicing and practicing and practicing. How many people do you honestly think that you become a better trader? Do you feel that you become more comfortable to press buy or sell? Anybody? Exactly, because it's just practicing. You keep studying, you keep studying, you keep studying, you keep studying, and you finally get used to it. That's the whole main point. Just like in every other craft, passion, whatever it may be. You know what I'm saying? You got to put in the hours, you got to study, and you got to be good with it. You know what I'm saying? A lot of people all the time said, dude, I'm not getting it. I'm not getting it. I'm not getting it. But I bet you people aren't marking up the charts. They're not highlighting everything. They're not understanding the technicals. They're not, circling the areas where market reversing continue to go along with the trend of the path of least resistance. You know what I'm saying? Of course. Oh, well, yeah, you're a newbie. Awesome, amazing, good. That's good. It means you're on here. You're on the beginner session. We're all gonna learn. We're all gonna learn the technicals. You know what I'm saying? But next, process from analysis. Now, what process from analysis is simple. No matter what, you overanalyze and you look at charts, and for some reason, you just can't figure it out. You're watching it. You're seeing how the charts are. You're seeing how it is. You don't understand why market is moving a certain direction. You don't understand where the market's moving is a certain direction. Okay. All right. So my main point for you guys here, before we even jump to harmonic scanner or anything at all, is everybody good with the psychological aspect, and now they kind of have a feeling or understanding of what it takes mentally to know about the markets. Awesome. Now I'm gonna go on the technical side of things now, so that way people could understand how to use. Yes, guys, do me a favor. Like I said, I'm gonna teach you guys in the psychological aspects and how to draw everything up. So patience, please. And whatever we teach here, have whatever questions that is being pertained to what I'm showing you guys. And the reason being is I don't want to jump the gun and people ask questions here. Just stay focused and focus on this. Of course, I'm going to show you how to mark up a chart. That's the main point of the beginner session. So, like I said in the beginning, psychological aspect, how to mark up charts so that way you can get on entries. All right? We good? Everybody, we good to continue? All right. First things first. This thing right here. Boom. This line. Right. The reason why I say that first is because we utilize this thing called support and resistance. Now, what support and resistance is levels within the market that were price already printed and showed that it's respecting that certain level. Okay. So I could take this line and drag it all the way across in different places, and I can start to see places where it's testing. Look at this. Does everybody agree that price is touching this and bouncing underneath this line? Everybody agree on that, right? This is TradingView. It's a free website. You can pay for a pro, but I use the free one. Get markup charts on it. All right. Then where's the next level? You see where price is bouncing above it. You see how price is bouncing above it? When I utilize form resistance, I'm always utilizing one line and I'm dragging it and having it adapt to exactly where price is moving to, so I have a feel for it. Okay, but what I'm gonna do right now is I'm gonna show you guys what it looks like when I just break it down into levels. Okay, when I just break it down into simple levels, so you can see how this works within the markets. Okay, so look at this closely. As you can see, right, there's an area where price moves up to and bounces off like it's a ceiling. What that is called resistance. It's where price is touching it and then bouncing underneath and coming back up and touching it. bouncing underneath. Okay. Now, if price is above this level, it's called support. How do I know where to place it? Look at where market is touching it, not passing it. You see it? What's one thing that we all have in common within these areas? Look, I'll show you. What's one thing we have in common with all these areas right here? So wherever I highlighted the circles at, what is one thing that they all have in common with that line, with that red line? Exactly. Look, price is bouncing underneath it. Price is bouncing above it. Price breaks below, starts bouncing underneath it, right? Just look, price is bouncing above it. Look what happens. Price finally breaks, comes up, bounces underneath it. Okay. And look what happens. Look, support, which is like the floor, it breaks the floor, comes back up and becomes the ceiling. Makes a floor over here, which is also a ceiling. Goes back up to test as a ceiling. There's a floor here, breaks the floor, comes and tested as a ceiling. Okay. And then you see this level where there's a floor here. Well, it broke the floor, became the ceiling, right? And then price broke the floor here and became the ceiling. So if price is moving into a downtrend, what do we need to happen when it comes to support resistance in order for us to confirm that it's dropping? What's crazy is the fact that even with these levels, do you see something in common to the right? Exactly. Break obstruction retest. Do you see something we have in common on the right with these lines? Is there anything that we have in common with these lines over here? Anything at all? So you can see how the lines are respected here at certain levels. What does it have in common over here on this side? Exactly, they're respected. So look, you see that price breaks all the way above this level, comes up. Look, now resistance, the ceiling became the floor. Okay. If you want to move this up a little bit, look, the ceiling became the floor. Okay. The ceiling became the floor. This ceiling, which is once a ceiling over here, became the floor. The ceiling over here, it broke above it and it became the floor, right? And then price comes up, tests, right? Comes over here where the ceiling became the floor again, and now it's breaking above. So what would we be looking for in order for us to enter for a buy position? What do they all have in common here? The ceiling became the floor. 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 What do we need to happen here in order for us to buy it? No, not a breakout. The ceiling became the floor here. 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 There's a ceiling here, and it's breaking above the ceiling. Yes, a retest. We need it to become the floor. So what happens is a lot of people get excited. Look, they get excited. It's like, oh, I'm gonna buy, I'm gonna buy, I'm gonna buy, I'm gonna buy. Rather than waiting for it to come down to retest, look what happens if you buy it. You buy it, you buy it, you buy it. What happens is it starts to drop and you're negative. You could be up to negative up to 68 pips. And I don't think that's good for your account. You guys could agree on that, right? So history repeats itself, and we just have to stick to what we already know, what we already see with support resistance. If price is going into a downtrend, we're looking for sell positions to ride that wave down instead of trying to catch a reversal. So look how simple it would have been. I would have saw it break the floor and test it as the ceiling. Easy. I would have sold it, made some profit. Look, it broke the floor here, became the ceiling. Broke the floor, became the ceiling. Broke the floor, became the ceiling. Broke the floor, became the ceiling. Now, if we're looking for a buy position, we need it to break the ceiling and become the floor. To break the ceiling and become the floor. To break the ceiling and become the floor. Yes. You break the ceiling, it becomes the floor. You break the ceiling, becomes the floor. Everybody follow me so far on support and resistance? Now people are like, oh, it's too complicated. It doesn't make any sense. Well, yes, it does. Look, support becomes resistance, and resistance becomes support. The only thing that kills us is the fact that we're trying to see things that we're not supposed to see. The chart's already telling you exactly what's going on. Everyone's going to be like, oh, look, it's a buy, it's a buy, it's a buy. What happens if price breaks below? Well, guess what? If I want to sell this, I need a price to break below this level, break this floor, and become the ceiling. The same example it did over here. Look, you could utilize this example. In order to sell it, you need to see something like this. 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 In order for us to buy it, we need to see something like this. Break the ceiling, become the floor. Boom, 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 boom. All right? Everybody understanding this detailed version of support and resistance? All right. For the people that said somewhat, and for the people that said a little, what is the confusing part about it? I have a level of a ceiling and a floor. I see it break the floor, becomes the ceiling. That's where I'd enter. Let's see it break the floor, patience, test as the ceiling. Break the floor, 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 test as the ceiling. Break the ceiling, become the floor. Break the ceiling, become the floor. Look to the left. Look at this. Wherever you move your cursor, to the left or your right, you're able to see horizontal and vertical lines. Okay? So that's what I'm asking. For everybody that's saying a bit, a little, not quite, whatever it may be, what do you need to clarify? Like what is the confusing part? That way I can help you guys out. So that way everyone understands it. What we're doing is we're watching these levels of where there is previous resistance and waiting for it to break and becoming the floor. You keep seeing it break. Oh, broke this level, broke this level. Now you're going to see which level it comes to test. Oh, it's testing this one. Became the floor. Broke above. Look, broke this ceiling, which is also a floor before. Still not sure when to enter. Here, I'm gonna give you guys arrows. Hopefully this clarifies. I think the question everybody's asking when to press buy or sell. The thing is, it's gonna get to a point where you're gonna have to feel comfortable press buy or sell based on the confirmation. This is one confirmation, guys. I'm not even done yet. This is just the first part. Is the arrows the point of entry? I'm gonna ask you guys that. Is the arrows the point of entry from what you guys see in the charts? I draw everything up on the 1 hour and I enter off the 30. When it hits the floor, is it good? Is it a good point to jump in? Everybody can answer that, right? When it hits the floor, is it a good point to jump in after it breaks resistance? I'm telling you guys. The reason why I'm asking the questions back to you is because now you can look at the chart and you tell me the answer. The thing about Forex is we just like in anything in life, we always seek validation of other people's opinions when it comes to everything else in life. But once we realize that we stop living a life of dogma based off other people's decisions for us, we understand that we can do that the same thing with Forex. Our main point is to utilize confirmations for us to enter. I could ask the same question you asked me and ask you, and you'll know the answer to it. You guys agree on that, right? So jump in when it hits the floor. We jump in when it hits the floor. Tell me, if we saw it break the ceiling and it hits the floor, would you felt comfortable seeing where price is going to enter? Now I'm gonna show you guys something as well. Let me delete this. Not when it breaks, when it tests. Look at it. If it breaks, would it be smart for us to enter? No. Wait for it to test. Why would we enter, and watch price move in the opposite direction for a certain amount of pips before it goes positive? So the next thing I want to show you guys as another confirmation is price reversal zones. So what I do is I look at areas where there's support and resistance. Listen to this one carefully. I look at areas where there is support and resistance. Now look within those levels, and if I see wicks, not candles, but wicks within those areas, either touching the line or breaking through it, I could draw a box based off those wicks all the way across and look how it's respected. Now, as an example, number one, look, you see how there's levels of support here and resistance? Do you guys see any wicks? Do you guys see like a wick where it's touching it? You see a wick where price is trying to touch it, doesn't break it? What those wicks are is where price got in and out of those areas quickly. Now watch this. I just take a box, pick any wick, whether it's this wick, whatever, as long as it's touching the red line, either breaking or touching it. Look. So I'm going to pick this one. Wick to the body of the candle. Body of the candle, and go all the way across. Do you see it? Wick to the body of the candle. Now, what do you see within this blue box? Do you see price reversing off of those boxes? All right. Let me pick another level. All right. Wick, body of the candle, wick, body. I could pick any of these. I could pick this wick to the body of this candle. And go all the way across. Wick to the body of the candle. Do you see anything that helps reverse perfectly? You see the boxes? You pick another one. Wick, the body of the candle. Wick to 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 the body of the candle. I don't know. Will it predict future movements? Guys, look. Let's stay focused on this. We called 1,500 pips in one day. We average over 1,000 pips a week. It's getting normal for us to make 500 pips in one day just from looking at random pairs. What you're seeing is how price reacts. So that way you could find a way to respond. So if you figure out how the markets move based off the structure of the market, wouldn't it be easy for you to take your piece every single time? This is what a wick looks like. These lines. That's what a wick looks like. These lines. Look, there's a wick over here. I could bring this one all the way across. Look, wick. You guys see it? So that's support and resistance. And utilizing the wicks within those areas of support and resistance and those levels, you can create these boxes. Now, what these boxes are price reversal zones. And if you don't believe me, the answer is right here in front of your face, because you can see it really break, go into the box, and drop. You can see it break, go into the box, and then drop. You can see it break, go tap the box, and then drop. Price comes up into this box, and then drops, goes into this box, drops, goes back to this box, drops, breaks below, tests that box, drops. Now what does it do over here? Same thing. Boom, hits it, hits it, hits it, hits it, hits it. You guys are starting to understand what the price reversal boxes are used for? Awesome. Next technical for a confirmation. I take a trend line and watch this. So do you see how price will touch a certain area once, twice, three times, four times? You see how it's respecting it like a slanted level of a ceiling? You guys see this? You're gonna get to a point where you don't even have to draw this line up. You can actually see it with your eyes. Okay? And then same thing over here. Price is bouncing underneath it like it's a slanted level of a ceiling. What did price do over here? Same thing. Right? What does price do all over here? Same thing. What does price do over here? Oh, same thing. You guys see that? So I'm showing you guys is by utilizing that as another visual confirmation that's giving you the answers to the test and is making you feel more comfortable to press buy or sell instead of just guessing. Because now you know why. If I want to sell here, well, I have an area of resistance, which is a ceiling. I have a trend line where price is bouncing once, twice, even over here. I could bring this all the way across, touching, 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 touching. Okay. I have a price reversal zone, which is a box, and support. The floor became the ceiling, which is called a pullback. It's confirming that this level of a floor is now a strong level of a ceiling. I don't know, will the chart show the timestamp or something like that? Look, each one of these candles represents a 1 hour candle because it's 60 minutes. I don't know what you mean. What I care about is the technicals, where I press buy or sell, and then to make the profits. All right. So back to what I was saying: a ceiling, a trend line, a zone, and support, which is the floor, became resistance, which is the ceiling. That would have made you feel comfortable to enter this trade at this point because they all line up together. Same thing over here. They all line up together, right? That's the whole main point, right? Same thing over here. They all line up together. I could bring this and drag it all the way across over here. You can see where price is touching, right? Look. Oh, they all combine together. Oh, look. They all combine together. Where are the entries, Chris? Where the yellow circles are. How do you know when to enter because I just told you all the confirmations needed to make you feel comfortable to press buy or sell. There's no magic to it. Does it hit your checklist? Does it hit your confirmations? If it does, then take your piece. Take your piece, you collect your money. You collect your money, get a positive day. So I'm going to show you guys the pieces that you should be capturing based off all those confirmations. Look at this. So you're telling me that we have a way where we could capture every single piece of the market by just being patient and waiting? Oh, over here. Capture this whole movements by just being patient and waiting for it all to confirm. Like, this is what we could capture. So when people ask how many pips are you capturing, you can honestly say I'm capturing all of it. Does this give a visual now on the pieces that we're collecting, guys? Exactly. Piece and piece. Let's run it. So that's what I wanted to break down for you guys today. I wanted to break down an entire chart and to show you guys that even though it looks like it's mumbo jumbo, even though it looks like it's just random, it's not. Look closely. Now, for me to enter, all I have to do is see if price is going to break above resistance to test as support, or to break below support and to test as resistance. What this does, it gives you what the pieces should look like. So now you know what to do and what to enter when it starts to happening in front of your eyes. Pretty simple so far. Did I break it down as simple as possible, like as people grasping the concept? Awesome. Thank you guys so much. Hopefully that, coming from the holidays, that this was good information, a refresher. Not too much. I'll break down more detail on Thursday at 8 p.m. Eastern for the beginners. But I'm glad everybody had a good session. Everybody had a good beginner session today. You can't. This is a live trading room. All right. So I will see you guys in probably about 5 hours during the London session. We're going to look at some trade setups, but at the same time, we can't really force too much because it is the holidays. Okay. So I'm glad everybody had a good beginner session. And I will see you guys on the London session in the next 5 hours, pretty much. And we'll look at some trade setups together. All right. You guys have a good night. I'll see you guys in a couple hours. All right.